Welcome back. It gives me immense pleasure to record the last episode of Wealth Creators Emerging Giants. As I have been talking, investment in stock market requires slow and steady commitment. If you are patient, if you remain invested under all conditions, you will make a good gain. Never forget, timing is very difficult in the market and nobody has been able to time the market. In fact, the way the stock market return comes in a year which has got 52 weeks, 2 to 3 weeks sometimes could be a big spike and that gives you return for the whole year. Other 47, 48 weeks could be normal or could be declining. So that's the way it goes. So therefore, the people who believe in timing, they are always defeated. But what one need to do is, one can sort of keep on booking some profit and sit on the cash so that when there is a correction, you just invest more and more in the preferred stock. With this background, my whole endeavor of bringing this series is that you at least have a list of stock which you can research on and be ready for those days when you are able to buy these stocks and bring to your portfolio. That's the whole idea. So with this brief, let's move forward. I am going to bring to you two stocks today. Again, these stocks will be excellent management, upward sloping curve and a good return. So let's get going. So the first stock is Garbade Tech Fibers. This is a company from Garbade Group which primarily does technical textile sector. What it means is providing a specialized solution to the cordage and infrastructure industry. It has got almost a lead position, it's a leading company in that particular sector. So normally when I look at the company, it should be a leader in that sector and it should have a moat, means some sort of fence around it so many others cannot enter the sector very easily. Now this company has a capitalization of about 7,000 crores. If you look at their ROC 23% and ROE, return on equity, is about 18.3%. Dividend yield is 0.2 and debt equity is almost close to 0.08, which is a very good financial position for the company. Now let's look at their price performance for a longer period. It does satisfy our requirement of upward sloping curve. And another thing I like to tell you here, when you look at this curve minutely, there is a spike, there is a rise in the curve, then for some time there is a horizontal consolidation. Similarly, now it is going through the consolidation. So consolidation could be a good time to acquire the stock generally, because you know that this company is going to do good. So therefore, it makes all the sense to stock this particular company so that when the correction comes, when the uprise comes, you are benefited immensely. Coming to the PE, let's look at the PE ratio. Now even the bar shows the EPS, which has got a rise all the time. Last few quarters it is sort of stagnant or a little bit coming down. And if you look at their 5 years median PE at about 26.3, and from that angle the stock is certainly overvalued today. So my recommendation would be just list this stock and wait for appropriate time. You need not invest at this price, because when the PE comes closer to the median, or as I have mentioned to you earlier, if you take the 5 years chart, it should be either less than or on 200 DMA, which is not today. So therefore, it makes sense to wait for this stock before you really induct this stock or welcome this stock in your portfolio. The next stock for today is a very well-known company, CDSL. Anyone who is dealing with the stock will know NSDL and CDSL. Now CDSL is the largest company promoted by Bombay Stock Exchange. And one another news which is very important for this company is from 1st of November, all the insurance, life as well as general insurance, before you buy any insurance policy, KYC shall be mandatory. And CDSL is the prime company which is going to get this business. So obviously their profitability will move further. And that's one of the reasons last couple of weeks, last few days, this company's price has been looking up. So Now let's move forward and look at the numbers. ROC is about 42% and ROE is 32%, which is fantastic. Reasonably good dividend, 1.21%. Normally, growth company pays you 0.2, 0.3 type of dividend. So here it is 1.21%, which is quite good. And when we look at the price performance of this company for a longer period, see, upward sloping curve, but then again consolidating. So it's very, very important, and this does satisfy that. And when you look at the P ratio, so that we come to know whether it's a time to buy or a little expensive. So median P for 5 years is 32, whereas the current P is about 43. So little expensive, but if you look at last 1 year P, then it is quite low, because last 1 year the median P has been 55 and today is 42. So this stock, on each reaction or each correction, you can go on adding and building your portfolio. You should not be in a hurry. The time is such that you should slowly but gradually build the portfolio, and this comes from that particular area, that particular this one. When you look at the sales has multiplied from 95 crores to 550 in last 10 years, which is almost 6 times, and the same period net profit has moved from 51 to 311, which is also 6 times. So very good return. When you look at the compound sales growth, CAGR, all are more than 10%, like 3 years 41%, 5 years 30%, and 10 years 19%. Similarly, profit growths have been 40% for 3 years, 5 years 29% CAGR, and 10 years 20% CAGR. So fantastic company. If somebody had invested 3 years before, he could have got a return of 86% CAGR, 5 years before 30% CAGR. So friends, it appears an excellent stock to own and bring to your portfolio. So friends, today in the last episode of Emerging Wealth Creators, Emerging Giants, I have discussed 2 stocks, Garwade Tech Fiber and CDSL, both having leadership position in this segment. Both are backed by good management. Both have given fantastic return. So very good stocks to be included in your portfolio. But before I end, I like to reiterate, the purpose of this video is purely educational, and investing in stock market is a risky affair. So before taking any investment decision, either do your own research or consult your investment advisor. I hope you enjoyed this video. If you like the video, don't forget liking the video and putting your comments, because that goes a long way in building the channel. And also, I would urge you to put this particular video in your groups, in your social groups like WhatsApp, Facebook, and LinkedIn, Instagram, so that this particular video can reach to maximum number of people. Thank you so much for your time and remain engaged.